All right, let's dive in. Today, we are tackling one of the biggest, if not the biggest, challenges in investing, the battle that happens inside our own heads. We're going to build a toolkit, a set of proven strategies to help you get a handle on the psychological roller coaster of investing and, beat your own worst enemy, emotion.
I mean, this is the million-dollar question, isn't it? We all know the mantra is buy low, sell high. It's simple. And yet so often, investors do the complete opposite. We get swept up in the excitement when markets are hitting new highs, and then we panic and sell when things take a nosedive. So what is going on? Well, here's the thing. The problem is that our brains are basically hardwired against us when it comes to the stock market. That deep-seated fear of losing everything and that intoxicating greed for a quick buck, those are powerful instincts, and they almost always lead to terrible financial choices. But, and this is a big but, the good news is you can build a system to bypass that faulty wiring.
So we've laid out the trap, this emotional cycle of fear and greed. Now let's get to the good stuff. Let's start building the Disciplined Investor's Toolkit that's going to help you break that cycle once and for all.
First up is a tool that is, honestly, probably the most powerful and easy-to-use strategy for just about any investor. It's called dollar cost averaging, and its whole purpose is to take all that stressful guesswork completely out of the equation.
The definition itself is super simple, right? But the effect it has is huge. You're not trying to be a hero here. You're not trying to perfectly time the market bottom. You're just committing to a consistent plan. You pick an amount, you pick a schedule, and you just let it run. It's how you turn off that little voice in your head that's always screaming, "Is now the right time to buy?"
And look how simple it is to actually put into practice. Just 3 steps. The real magic, though, is in step 3. Invest automatically. You want to set this up so the money just goes in, month after month, without you even having to think about it. That's how you take your emotional self out of the driver's seat.
Now this is where you see the hidden genius of dollar cost averaging. When the market is flying high and things are expensive, your $500 naturally buys you fewer shares. But when the market drops and everybody else is freaking out, your same $500 automatically buys more shares. You're basically getting the asset while it's on sale. Over the long run, this seriously brings down your average cost.
Okay, let's grab our next tool. This one is less about automation and a bit more about shifting your whole mindset. It's about learning to watch what the crowd is doing and then having the discipline to calmly consider doing the exact opposite.
And who better to learn this from than Warren Buffett, right? This quote, it's not just a catchy phrase, it's the absolute foundation of a contrarian strategy. It's all about realizing that the point of maximum financial opportunity is often found at the point of maximum pessimism.
So, how can we actually measure all that fear and greed? Well, there are tools for that too. Take the Fear and Greed Index. When it hits extreme fear, it feels scary for sure, but that's often a screaming sign that selling has gone too far. Or the Put-Call Ratio. When that spikes, it means pessimism is at a peak, which might mean a bottom is close. And my favorite, when you see that mutual funds are sitting on record piles of cash, that's just dry powder waiting to come back into the market and push prices up.
Our third tool brings us back to that idea of systematic discipline. Think of automatic rebalancing as a mechanical way to force yourself to live by that buy low, sell high rule without letting your emotions get in the way.
Okay, so it all starts with a plan. Let's say you decide on a pretty standard balanced portfolio, 60% in stocks for growth, 40% in bonds for a little stability. This is your target. This is your personal North Star, based on your own goals.
But then, the market has a killer year. Your stocks do really, really well. And while that feels amazing, something sneaky has happened under the surface. Your portfolio is now totally out of whack. As you can see, you're now at 70% stocks, meaning you're taking on way more risk than you originally signed up for.
And here is the simple beauty of rebalancing. To get back to your target 60-40 mix, the system forces you to trim your winners. In other words, sell high. And then you take those profits and reinvest them in the part of your portfolio that's lagged behind. You buy low. It's completely unemotional, and it keeps you honest about your risk level.
Now, all these tools are fantastic on their own, but they are so much more powerful when they're part of a bigger plan, a master blueprint that is designed specifically for you.
That 60-40 portfolio we just talked about was just an example. The real question, the one you have to answer for yourself, is what's the right mix for your personality, for your peace of mind? How do you even figure that out?
Well, here it is. This is the ultimate guide. And it's not some complicated formula.
It's the sleep well test. It's a gut check. If you imagine the market dropping 20 or 30% and that thought makes your stomach churn and you want to hit the sell button on everything, then your allocation is just too aggressive for you. You need to find the mix that lets you ride out the storms without panicking.
Which brings us to the final and maybe most important piece of your blueprint, the Investment Policy Statement, or IPS. I want you to think of this as a contract that you make with your future emotional self. You sit down when you are calm and rational, and you write down the rules of the game before the game gets crazy.
And this is exactly how it works in the real world. Imagine the scene. Markets are crashing. Headlines are terrifying. And your emotional brain is screaming, sell, get out. But instead of panicking, you pull out your IPS. And there's a rule you wrote months ago, in a moment of clarity, that says, if the market drops 20%, I will put X dollars from my cash into an index fund. Just like that, panic is replaced by a pre-planned action. You've turned fear into opportunity, all thanks to your past rational self.
So there you have it. That's the toolkit. Dollar cost averaging, thinking like a contrarian, and automatic rebalancing. And it's all held together by a personal blueprint that's built around one thing, letting you sleep well at night. The only question left is, what's the first rule you're going to write down for your future self?